Yes, it is.
Okay, well, Yolanda,
Thank you.
love the area that you guys are in. Yeah, your hair looks good. The picture looks good. I can't see Tanisha yet. There she is. She looks great. You guys are good to go.
Okay, thanks.
So we apologize for starting a little late today. It's been a day, to say the least. But we are here for the How to Start a Business Back to Basics webinar. So Denisha, you want to kick us off while
All right, so some of the topics that we will cover today is just some of the differences between some of the different entities and setups of the entities, which includes S Corp, C Corp, LLC, sole proprietorship, EIN number, DUNS number, trademarks, and copyrights.
Okay, so we'll just go through like some of the questions we get a lot all the time is like, what's the difference between the various different types of business entities? And so we will go through that real quick. So you want to go, well, actually, let's do them. So I think we had it listed out. Mm-hmm. So you want to go, what, LLC versus, no, let's do S Corp versus C Corp. What's the difference between that?
Okay. Some of the biggest differences between the S and the C would be taxation. C Corp files its own tax return. C Corp files a Form 1120. S Corp files 1120S. However, the C Corp pays tax at the tax level, meaning the C Corp is taxed at a flat 21%, whereas the S Corp, you pay tax at your individual tax level. So whatever profits and losses your business makes, that bottom line number will flow through to your personal return. And once it flows through to your personal return, then you will pay tax on that number at your personal rate based on whatever other additional income and deductions that you have flowing through to that.
Okay, and so for me, from a legal perspective, one of the differences between an S Corp and a C Corp is really just in how it's formed. So they're both, depending on what state you're in, they're both kind of like formed the same way. You would create a C Corp and file your articles of organization, and then you do the S Corp election to become an S Corp. So from a legal perspective, from a setup standpoint, that's like really the difference for me. It's just really a tax thing. Okay, so
some more things with the S too is S cannot have more than 100 shareholders, and also one of the shareholders cannot be a foreign entity.
And just to reset everybody, because I know we got started a little bit late today. So everybody on YouTube, this is an interactive webinar. So definitely, if you have any questions as we go through, we're doing back to basics this week. So we're taking it all the way back to basics. So it doesn't matter like what type of business you're looking to start or currently have. We're definitely going to just strip it down and just give you basic information. So if you have any questions, type them in the chat box on YouTube. And then same thing on Instagram. If you have any questions as we go through the information, definitely type them in and we'll do our best to answer them. So again, back to basics. And so we're covering the different types of business entities that you can create and that you can form. So one of the ones you can form is a C Corp and an S Corp. And we just explained that the real difference between those two is really just the tax benefits of being an S Corp and a C Corp. So in simple terms, Denisha, what is like the tax advantages of being an S Corp? Simple terms.
Being taxed at your individual tax rate if you have a low individual tax rate. So I would say that.
Okay, and then if I elect to be a C Corp, how am I taxed?
You're taxed at the tax level, meaning C Corp pays its own taxes. It does not flow through to your personal return, so it's literally its own separate entity, and it files its own tax return, and you will pay a flat 21% on the income that you make. So if you make $100, you will pay $21.
Okay, and that, I mean, that's simple enough. I think everybody can understand that. So then a lot of the questions we get too is like, some people want to be LLCs, some people want to be corporations. So what is like the difference between an LLC or a corporation, or the benefit, I should say, of being an LLC versus being a corporation? And for me, from a legal standpoint, both business entities will give you some sort of liability protection. But it all depends on how you operate the business. But with an LLC, the assets that you have, like, so if somebody were to try to sue you for something that you did in your business that went wrong, they would be limited to the assets that the LLC owns. And with corporations, that is true up to the extent that they can pierce the corporate veil and then go beyond the assets of the corporation. And so from a tax perspective, I guess, what's the difference, or what's the advantage and disadvantage?
All right, so let's start with some of the basics. So with an LLC, you will file articles. I'm going to look down on my
And
notes.
we'll answer that question. There's a question that came in on Instagram. Yep. What is the max tax benefit for an individual? And I'm not sure if that's for which business entity or just you as an individual person. So I'll let Denisha answer that question.
All right, I'll come back to that. So again, back to LLC versus a C Corp. So LLC, you will file an article of organization with your state. The C Corp, you will file articles of incorporation. I think the biggest thing is terminology differences. So you have members, which are LLCs, versus shareholders, which are corporation. Some other things are, sorry, I'm looking at my notes. Some other things are, so with the LLC, members manage directly, or they can appoint a managing member. Whereas with a corporation, it's managed by a board of directors and they run the day-to-day operations. Again, from a taxation standpoint, C Corp, you're always filing at the tax level, the income tax level. LLC, if you are taxed as a sole, if the IRS recognizes you as a disregarded entity, which is a sole prop, then you're taxed at your individual tax return, on your individual tax return as a Schedule C. We can get there and talk about that later. If you are, let's say you are LLC and you are a partnership, you're taxed at the partnership, like as a partnership. So, because a partnership can be an LLC, then you would again file a separate tax return, which will be taxed at that entity's level, but it flows through to your personal tax return, which your Form K1, same as an S Corp.
And then you mentioned some terms, and we'll get to the question. You mentioned some terms that are important to consider, like shareholders and members. So if I am operating as a corporation and I have shareholders, people who gave me money to start this corporation, what tax documentation do I owe them? And like from an accounting perspective, as I operate the business, what do I need to keep track of to keep in mind that I, owe my shareholders something at the end of the calendar year or fiscal year, whenever my fiscal year ends? So
I think with any business, but with any business, it's best to keep good records. So with shareholders, you obviously want to keep track of any amounts that's put in. So like, let's say, that's what I call you.
Johnetta and I. Business.
Yep, Johnetta and I go into business together. We form a partnership. She puts in $1,000. I put in $1,000. Throughout the course of the year, let's say Johnetta puts in property worth $100,000, and I give my services that are worth $50,000. Now, obviously, Johnetta has put in more than I put in, but we want to keep a basis schedule internally, and usually your CPA or accountant will keep that schedule for you, so that way okay, Johnetta has put in more money than me. At some point, I need to catch up so that we can be considered equal.
And then as a partner in the business, how would I write that or account for that on my taxes?
You will receive a Schedule K1, which is your pro rata share of the income and expenses. So basically coming down to the bottom line, your pro rata share of the ordinary income that you received. So, and on your Schedule K1, if you guys have never seen one or heard of one, you can go to the IRS's website, just go irs.gov, or you can just do a Google search and you can search for Schedule K1, and you'll see how it's broken down. So you have your ordinary income or your rental income. Ordinary income would be if we start this type of business that we have going on right now. So we go into partnership. So whatever money we make, that will be our ordinary income. So let's say we made $100 at the end of the year from ordinary income. In our business expense, our business income, that'll be our ordinary income. And then let's say we decide to get a few rental properties together and we made $1,000 in rental properties. That'll be still under the same entity. Let's just keep it all under the same entity. So we have rental income from the building that we own for our business. So we made $1,000 in rental income, and then we made $100 of our business income. So it's all flowing on the Schedule K1. And then let's say we invested all of this money we made into the stock market. So we made $100 in interest income, and we made $500 in dividend income. All of that, again, still from the same business, that's still reported on that same K1. So it's just Johnetta received her portion of it, I'll receive my portion of it, and then it all flows through to our individual income tax return.
Okay, and then there was a question on IG. So if one partner puts more capital into the business, are you required to split it equally? And so the answer to that question is no. It really just depends on what you guys put in your operating agreement. So if somebody invested more, you guys split it equally, or you can put in that person has to get their capital investment back first before you guys split the profits equally. It just depends on what you guys decide you want to do in your operating agreement. So you don't have to split it equally. And then do you want to tackle the other question that was answered earlier?
I think so. The question earlier, if I'm not mistaken, was what was the maximum tax rate at the individual level? And that's 37%. I believe that was the question.
And you can type back if we did answer your question. And then same thing on YouTube. If you guys have questions as we go, you can type them in and we'll be able to see them and answer them. So we've talked about the difference between an S Corp versus a C Corp, a C Corp or S Corp versus an LLC. And so some people want to start like nonprofits, and a lot of people want to start nonprofits because of like the tax benefits or deductions or savings that you can get. So from like a numbers perspective, do you want to talk about nonprofits real quick, and then I can add on from like a legal perspective? But actually, I'll just go from a legal perspective. So when you're forming an LLC, you have to set yourself up as a state nonprofit first before you can apply to be a federal nonprofit and get your 501c3 or 501 whatever, depending on what type of nonprofit you're going to be. So that's one thing to keep in mind. And then another thing from a legal perspective that you're going to need to consider when you're forming up a nonprofit is your bylaws. What process and procedures is going to govern how that nonprofit organization works. And then you also have to have a board of directors. And most states require you to have at minimum 3 board of directors. So you have to identify those 3 people before you start your nonprofit. But you can also have more than 3. But at a minimum, you have to have 3 people be on your board of directors. And so those are like, I think, the 3 biggest things to think about from a legal perspective if you're looking to start a nonprofit. So I'll let Janisha take it from a tax perspective because everybody wants to be a nonprofit for that as the savings.
From a tax perspective, honestly, nonprofits are not my expertise. So I'm not going to pretend that it is. That's definitely a niche market. I can tell you that nonprofits have to file Form 990. That's the tax return that you will file if you have gross receipts over $50,000. I think that every state, or I think it's based on like what contracts or grants that you get, if it like how you break out the income. And so again, with any business, I would recommend keeping track of your income and your expenses. So like I know one thing with the nonprofit, if you start a nonprofit and let's say based on whatever your business is, if majority of your money is given is donations or grants or whatever, then obviously that's that's tax exempt. However, you still have to file a tax return if you hit over a certain amount in receipts. It just may not be taxable.
Okay, and so is there like a specific tax document? And I know this isn't your forte, but is there a specific tax document that I have to give people who donate money? So let's just say I'm holding this really nice exclusive gala to get people to donate and raise money to my nonprofit. Is there something that I have to give them for their taxes based on how much they donate?
Yeah, so I don't know like the legal term or technical term of it, but obviously it's kind of like you're tied into a church. So when you tie to your church gives you a donation receipt. So at the end of the year, based on how much you donated, you would tally it up and you would have to give all of your contributors a donation receipt. So that way they can also in turn write that amount off on their taxes because they get the deductible. They get the tax deduction on their tax return.
Okay. And I don't want everybody in here hitting me up to donate to, I do donate, but so I had a situation where I donated to a nonprofit to help support them because I believed in what they were doing. And I know sometimes you can claim when you file your taxes as an individual, sometimes it does benefit you to claim that donation that you gave to a nonprofit, and sometimes it doesn't benefit you to claim because it might not be enough to really make an impact. So what are some things that you consider when you're advising somebody whether or not they should claim like charitable donations that they gave over the course of the year?
So the biggest thing is it more advantageous for you to take the IRS standard deduction or to itemize your deduction? So when I say itemize your deductions, that's basically filing a separate form. And so if you itemize your deductions, let's say you had a really bad year medically, you had $20,000 in medical expenses. Under Trump's new laws, you can not deduct more than $10,000 in state taxes, meaning if you live in a state where they withhold, you're required to pay withholding tax in. You used to be able to just take that amount free willy. So let's say I had a job and through my employer, I paid in $15,000. I had $15,000 withheld from my paycheck and I paid that in to the state of Georgia. And so on my tax return, I can then take that $15,000 that I withheld from my paycheck. I can add that to the amount of state taxes that I withheld and put that on my Schedule A. So from that alone, if I had $20,000 in medical expenses, $15,000 in state taxes paid in, it's more advantageous for me to itemize over take the standard. So the IRS, the new tax reform basically says the maximum amount that you can deduct with the state taxes is $10,000. So that $10,000 is now your what also falls into that tax category. So let me take a step back. Okay, so when you itemize, you get to write off certain categories. So you have your medical expenses, you have your taxes, you have your interest expense, which will be like your mortgage interest you pay on your house. You may have some investment interest from stocks and bonds, portfolio stuff. And then you also have a separate category for some casualty losses, which the laws behind that changed. And then you also have like some other miscellaneous deductions, which a lot of that stuff changed as well this year. So when I talk about, so those are your categories or your buckets. So with the medical, so
you
your
should
medical,
have like a flipboard.
I know. So with the medical, you basically now have, I wonder if I can find it. Or no, I was gonna say find a blank form. I'll find a blank form to show you guys. But with the medical deductions, you now have it's capped at 7.5%, depending on your age. Most of us are younger, so it's going to be capped at 7.5% of your AGI, which is your adjusted gross income. I'm trying not to get too technical. So let's say I can deduct $20,000 in medical expenses. So then we come down to the tax category. And the tax category, again, you used to be able to write off or take your state withholdings from your paycheck, any estimated state taxes that you paid in. So if you're self-employed and you paid in some estimated state taxes throughout the year, like calendar year, so it would have been, just January 1 to December 31st, estimated payments you paid into your state, you could also include that into that bucket. And then you have your real estate taxes that you paid on your primary or secondary residence. You have your property taxes, which are the amounts that you pay on your vehicles when you renew your tags and all of that. And so you take the aggregate of that amount, and then that's its own bucket, and you get to your total. So under the new laws that changed under 2018 for the 2018 tax filing, that's now capped at $10,000. You can't go over $10,000 for that bucket. So then you come down to your mortgage interest. And with your mortgage interest, same thing. You take that amount. So let's say I paid $15,000 in mortgage interest that's deductible. So now I have $20,000 that I can take from my medical. I have $10,000 from my taxes, and then I have $15,000 from my mortgage interest. That's all I got. Oh, and then you have charitable donations. So let's say I was cheap this year, only gave $500.
So I couldn't give as much as I wanted.
Yeah, I only gave $500. So the aggregate of all of those numbers lumped is greater than what, if I'm a single individual, that's greater than what the standard deduction is, which I believe this year it changed. So don't quote me on this, but you can look it up. I believe the standard deduction was, I want to say $12,000 for a single individual. Again, don't quote me on that. Google it. You can go to IRS's website. But obviously the aggregate of that number is greater than the standard. So in this case, it would be way more advantageous for me to take that or write off that charitable deduction, whether I donated $500 or $5,000. It's greater. It's better. Now, let's say situation changed. I did not have any medical. I only paid in $2,000 to state with my withholdings, and I don't own a home, and I donated $1,000 to charity. So now I only have $3,000. So it's more advantageous for me to take the standard deduction over itemizing my deductions. And all of that all of that trickles down to your bottom line and your number as far as like how to get to your taxable income. So obviously, the greater the number is, the less your taxable income is, which boils down to how much money you'll be paying tax on.
So at the end of the day, long story short, there are a lot of considerations so everybody thinks it's like, and you should give, and we're not saying don't give, but we're saying that if you're giving from like a business standpoint in order to reap the benefits on your taxes, there's a lot of different factors and variables that go into that to make the decision on, from a business standpoint, if you're trying to do like the wealthy do and give to get some tax deductions. There's some different considerations that go into that. So we're going to get back to DBAs versus sole proprietorships, because that's another thing that we get asked about a lot. And so for me, from a legal perspective, if you are a sole proprietor, you can file like a DBA to hold yourself as doing business as. So like, let's say, for example, your name is John Doe, but you have John Doe Plumbing, then you would just file like a DBA certificate and say you're doing business as John Doe Plumbing. And from what I understand from a tax perspective, you could still use your social security number, even though you're an individual doing business as whatever the name of that DBA is. That
is correct. And so from my perspective, there's really no difference between a DBA and a sole proprietor. If you earned $100,000 as your DBA under your social security number, I would recommend basically filing a Schedule C. Instead of showing that income as like on a other income line, I would recommend filing a Schedule C so that way you can write off some deductions against that $100,000 if it's legitimate deductions.
And what are so a lot of people want to do like meals and entertainment, and what are some other?
So meals and entertainment are a big red flag to the IRS because those are categories that a lot of people just lump numbers into. So if you make $100,000, there's a good chance you're not going to spend $50,000 on meals and entertainment. So some things that are great write-offs, now you can write them off, but some things that are great write-offs are advertising, office expenses, supplies, I'm thinking. So if you hire some additional contract labor, issue them a 1099, but then you also get to write off that amount. If you get to the point where you need to hire an actual physical employee, not contract labor, then you can write that amount off. You can also write off the employer portion of the taxes that you pay to them or on behalf of them. Some other things would be, I'm thinking as my form as it comes down.
Another thing that's common too. So there are some industries where, like, let's say I'm an actor and I have to supply my own costume for that film or movie that I'm in. And I have like a LLC that I formed to loan out my acting service. And so now that LLC is buying the costumes that I need to be in this movie that I'm in. Would I be able to write that off versus, let's say I'm an entrepreneur and I need some really fly suits for my business meeting?
Red flag. So I've been in this industry for about 15 years, and I can say that in all of my teachers, I work with people that's made hundreds of millions of dollars, and that's a red flag. So in terms of, depending on what you do. So let's say if it's a uniform, you got your company logo on there, 100% write off. But let's say I go out and I want to get fly, and I go get me a Gucci outfit because I'm an entrepreneur. I want to look good, right? You can't write off a Gucci outfit because the IRS notice they see that as basically you can wear that outfit or that uniform anywhere. Like, you're not only wearing it for business. So if it's something that you can wear on your own personal terms, a suit, whatever, you're not really supposed to write that stuff off. Now, in Jonetta's case, where she used the costume, if it's truly a costume for a role of a movie, then I would say yes, because I mean, clearly you can kind of, if you were to ever be audited, you can support and show that you had to wear this outfit for your role. So I think that in terms of writing off things, you just have to be comfortable with whatever things that you do if you were to be audited, and be able to prove and substantiate that potential write-off.
Okay, and so
same thing with meals and you mentioned meals and entertainment. With meals and entertainment, if I go take a client out to eat or something like that, then absolutely I'm going to put that on my company card so that I can have that as a write-off.
And then we only have 2 more topics, and since this is the last one for May, and normally we keep it business focused, but we also understand that social media is about being social. So we'll open it up for you guys to ask us any like business questions or just general questions in general.
You guys may see me drinking water. I'm recovering from a sickness. So
yes, Denisha had the flu. And so, and that's, I guess, something we can share on a personal level, like as business owners. And I actually had something, we all have to make like sacrifices and do things in order to like move the business forward. So she hasn't been feeling well. I had another engagement that I had to like move around to honor our commitment to be here tonight and to do this last webinar and to provide you guys value. And so that's just something just general as a business owner and as an entrepreneur, we all have to adjust. We have to make sacrifices, but we do what we have to do to make it work. So if you guys have any questions, type them in while we go through the last 2 topics. So
someone asked if the Gucci outfits has your logo on it, can that be written off? I mean, I guess that's a valid question. If that's what you want to do, I mean, if you are comfortable with, you spend $5,000 on a Gucci outfit, you get audited by the IRS, and they come in. I mean, your logo's on there, so that's good. But how do you justify that you had to go out and spend $5,000 on a Gucci outfit to put your logo on there versus going out to get a $40 shirt? So something to think about.
Well, a lot of these high-end companies now are making everyday wear, and so they fit a little bit different and they feel a little bit different.
I hear you guys. I am one of the conservative approach. Again, I've worked with doctors and lawyers and high-end doctors that's all about social media and the body. What's the doctors that's about your body? They do
the etching now that's in.
Yeah, I can't
the
think
body
of the name
sculpting.
of it. Super high-end profile doctor. She shopped at Saks and Neiman and stuff all the time because she's always on the news and promoting her business. No, no.
And I mean, I know I've heard the same thing too. Because as an attorney, I want to buy nice things to wear when I'm speaking or presenting or whatever. And I know when I've done it in the past, like I've had to claim it as a contribution or like a paycheck that I gave to myself to buy that outfit, but I couldn't write it off as a deduction when I've done my taxes. Okay, so 2 more topics, and then whatever general business questions, entrepreneurial business questions that you guys have, type them in and we will answer them. But so the next topic we're going to cover is EIN number versus DUNS number.
I'll let you talk about the DUNS number.
Okay.
I've never gone to the
So
process.
like a DUNS number is basically a number that you use to establish like business credit. And so that's really what your DUNS number is for. And your EIN number is what you use to file your business taxes. So one is to establish business credit and the other one is to account for your taxes. So that's like basically the short difference between an EIN number and a DUNS number. And then the last one was the trademark versus the copyright. So
and obviously it's best to hire a professional, but if you needed to go apply for your EIN number, you go to irs.gov. On their website, there's something on the right-hand side that says apply for an employer identification number.
And there are different types of like elections you can make when you apply for your EIN number. And that's one of the things that Denise and I do in our Business in the Box service is that when we set up your business for you, we'll get your EIN number to make sure that you're picking the appropriate election for whatever type of business that you're setting up. And so the last one really quick, and Denisha can check out the comment, but the last one real quick that a lot of people ask is the difference between a copyright and a trademark. So I will have people ask me, and we will answer the question. And like I said, YouTube, Instagram, if you have questions, type them in because we're gonna go through free question and answer session as we wrap up here. And you're talking to 2 very knowledgeable, very experienced business professionals. And I know that these opportunities are hard to come by. So now would be the time to get your burning questions answered. But so copyrights, trademarks. So a lot of times somebody will come to me and they'll say that they have an idea for a business. And they want to, I'm really trying to think of an example where people confuse like the 2 terms. So they'll say, okay, they wrote a book and so they want to trademark the book. And to the extent that you're trying to trademark the words inside the book, you can't do that. That's what's known as a copyright. And so the difference between the 2 is a trademark is like a logo or a catchphrase or a slogan that you use to represent your business. And so that's what could be trademark. And then in terms of a copyright, that goes towards artistic individual works that have been created. So like a lot of like content that we post on social media, like videos, graphics, those things can be copyright. Like if you write a song, if you write a book, if you do a dance routine. So things like that, artistic works of art can be copyrighted. And then something that represents your business, whether it's a slogan, a picture, words put together, that can be trademarked. So that's the difference between the 2. And in terms of like the business context, I'm seeing a lot lately that people are investing money on creating a brand. And then they come to find out later that somebody else is using that brand somewhere in another part of the world that you're not, or the United States. that you're not familiar with, and then all of a sudden you get a cease and desist letter in the mail telling you, oh, you're infringing on my trademark. So I always encourage people from conception, you need to check to see if you can even trademark whatever it is that you're thinking about using to represent your business, because you don't want to invest thousands of dollars into building this brand only to find out later that you have to rebrand because somebody else is a trademark owner of that name or logo that you're trying to use to represent your business.
When is it best to trademark your logo? So I have my logo for my brand, my business. You have your logo. At what point do you recommend trademarking?
So there's two things you can do. If you have the idea for the logo and you checked and you see that nobody's using it, but you're not quite ready to start your business yet, you can file what's called an intent to use trademark application. And what that does, it says, hey, I'm not actually using this logo in the marketplace just yet, but within a year, I should be ready. And then you'll file an official trademark application, because one of the requirements to register your trademark is that the U.S. Trademark Office wants to see that you're using that mark in commerce. So are you using it on a website? Are you using it on marketing material? So once you start to put it in the marketplace, you can get your trademark application. But if you just want to be extra cautious and reserve it before you're ready to do business, then you can file an intent to use application.
All right. So we're going to go to a question really quick before it goes away. With regards to mortgage forgiveness, on the portion that is forgiven, does the homeowner have to pay income taxes on the portion that is forgiven and given to the homeowner as income? So that answer is basically, it depends on how they issue the form. So whenever you have any type of cancellation of debt, most of the time they'll issue you something called a 1099-C, which is a form cancellation of debt. And that's their way of reporting the amount that they canceled or forgave to the IRS. On that form, there's a box here that says, there's a box that should be checked, and it says, check here if the debtor was personally liable for repayment of the debt. If they check that box, it basically is the way it flows through to your tax return. So let's say you owed $100,000 and you paid off $90,000, so they forgave $10,000. More than likely, that $10,000 is going to be taxable income to you.
So those were the topics that we had in our list for business basics. So
somebody asked you, in regards to trademark and copyright, does that fall under intellectual property?
Yes, trademarks and copyrights are considered intellectual property. And so as you grow in your business, these are things that you can license out to make money. From a trademark standpoint, you'd more likely than not be doing what's called a franchise, and or giving a license for other people to use your trademark. And then from a copyright perspective, you'd be granting a license for somebody to use your music, or you'd be granting a license for somebody to use your film that you created. And there's licensing agreements, are what they call, that give people the right to use your copyrighted work, or, like I said, in the trademark context, franchise. That's what McDonald's does, Burger King. They have, their systems and process in place, and basically you're just paying a franchise fee to use their trademark. But that was a good question. So YouTube, Instagram, this is the question round. This is the last way. Yes, this is the last one Denisha and I are doing for the month of May. We are doing a real estate focused one at the end of June. And we'll have more details about that coming up. But like I said, YouTube, Instagram, type in your questions. Whatever questions you have, just type them in and we will do our best to answer them.
And while we're waiting, I want to apologize again for our late start. We had some
technical difficulties.
Mm-hmm. Change locations and
yes, and commuting and all that stuff. Trying to make it work. Trying to trying to make it happen. But so since this is our last one and we're waiting for people to type in whatever questions they may have, how have you felt? I mean, this was a commitment, 4 weeks. We committed to going live. So how do you feel about the whole thing at the end of the day? I know for me, like, I'm not really a big like live person. I'm more of a behind the scenes type of girl. So this has definitely forced me to like step outside of my comfort zone in ways that I probably wouldn't. And I think it's made me more, I don't want to say I've always been a confident individual, but in terms of like, I think going in front of people and speaking and sharing, it's like you got to make yourself vulnerable. So it's made me more comfortable, I would say, being vulnerable.
Can you discuss business in a box?
Yes, we can discuss the business in a box. So the business in a box is a service that Denisha and I offer where it doesn't matter what kind of business you're looking to form or looking to start. But what's included in the business in the box is you get a 30-minute consultation with both of us together, and you tell us about the business that you're looking to start. We ask you questions to make sure that whatever business entity we're recommending for you to start really makes sense for your business. Because yes, a lot of people want to be LLCs, or a lot of people want to be partnerships or sole proprietors, but from a legal standpoint, and from a tax and financial standpoint, being a LLC might not be the best thing for you, or being a sole proprietor might not be the best thing for you. And so when we do the 30-minute consultation, we're able to assess that and then recommend what the best business entity is for you. And then once we establish that, then we actually form your business for you. So we'll form your LLC for you, we'll form your corporation for you, we'll form your nonprofit for you. We do that. And then we also get your EIN number for you. And then you also get a work for hire agreement. So those are the things that come in the business in the box, and the price tag for that. So we actually added it up. And if you were to do like an hour consultation with the both of us, it would be over $600. And so for the fact that we're giving you the opportunity to get the business in the box for $279 is like an amazing value, because you're getting to work with two professionals. We're setting your business up for you. So you know that, the foundation is set up right, but then, generating that income and generating that profit is on you. But, we do have other services that you can use once you form your business that we can help and support your business growth. And you can, if you're interested in the business in the box, I know the last week when we did it, a lot of people DM'd us to get started. So you can either schedule a free 15-minute legal chat with me, and there's a link in my Instagram bio. And if you're on YouTube, you can go to my website, www.jpaye.com, and schedule a 15-minute legal chat and just say you're interested in the business in the box. And then we can have a quick 15-minute consultation and get you onboarded in that process. Or you can DM Denisha.
Mm-hmm. And from a accounting perspective, I'll basically help you get your books, walk you through how to get your QuickBooks set up. And then for the first month or two, I'll give you a discounted rate at helping you, doing your bookkeeping for you. What's the price, and does it come with the DUNS number?
It doesn't come with the DUNS number.
Something we need to add to the business and to the business.
Give a thumbs up if it. I was actually thinking, give a thumbs up if you want to see us add the DUNS number to the business in the box.
That's actually a pretty good idea.
But I was actually thinking that we should add a checklist to the business in the box. But thumbs up if you want to see us add the DUNS number to the business in the box. But the price tag for it is $279 for the business in the box, but that doesn't include the state filing fee. So let's say for you were in Georgia and you were going to start an LLC in Georgia, it's $100 to form an LLC here. So it would be the $279 plus the $100 Georgia LLC filing fee for a total of $379. And we've formed a few businesses already. So, and we limit it to like 10 a month. Because it's, we want to make sure that we're setting you up correctly. So there's still a few more spots left for the month of May if you want to get in before Saturday for us to create your business and make you a CEO. So is there any other questions before we wrap up? Because Denisha has work she got to do.
Mm-hmm.
I got some contracts I got to review. So if we end early, that just means we get back to work a little bit earlier.
Foreclosure defenders asked a question about, she was saying something about with the forgiveness of debt if Obama, the tax laws change. Can you can you send me a DM at _gray _ financial, and I'll look at that to see if it changed as far as once the tax reform came. I don't know that answer off the top of my head, but I want to make sure I give you the right answer.
All right. So if there are no more questions,
that's a you question. Can you form? Does the business in a box allow you to form in all states?
No, the business in the box lets you do one state. But if you want to do multiple states, then you just buy another business in the box.
Or you can just pay Johnetta separately to add on that additional state. I think that would be probably a better situation if you're planning on, I guess.
And there are situations where you actually
states.
might have to do more than one. And that's something I guess we didn't really discuss when we were going through. But if you are let's just say you want to base your business in Florida because they have nicer tax laws than, let's say, Chicago. So you form your principal place of business in Florida.
That wasn't her question.
Oh, it was?
Keep going.
Okay. But then you actually do business in Chicago, then you would need to do a foreign business LLC so you can actually do your business in Illinois. So in that case, you would need to.
So her question was basically, we live in Georgia. She's asking, can we form a business in any state?
Yes, we can form a business in any state. So yes, the answer to that question is we do not need to reside where you are to set up your business for you. So if you live in
virtual.
Yeah. So if you live in California and you need us to set up your business in Cali, we can do that. Or if you're in Illinois and you need us to set it up there, we can. So yeah, we don't have to be where you are. I see the questions are coming now.
Will this replay?
What's the question?
Will this replay?
Yeah. Well, the replay, it's available in Instagram. It'll be up there, and then on YouTube, it'll be there for life. So you can even watch the other webinars that we've done throughout the month of May on my YouTube page, which is Paye Attorneys at Law. So yeah, their Instagram, it's up, I think, for 24 hours, and YouTube, it's up forever if you want to watch it. Any other questions before we sign off and get back to work? But we actually have, I can't speak for Denisha, but we definitely did enjoy chatting with you guys over the last.
Yes, you guys forced me out of my comfort zone. I am, like Johnetta said, a behind the scenes person. Don't really like to be seen at all. So you forced me out of my comfort zone.
And actually, I think it also, helped me to be able to articulate some difficult concepts, I think, better. Mm-hmm. So, should we continue to do these? I know we have some other webinars planned in June, but is this something you guys want us to maybe bring back in July or do occasionally in June? Let us know what you thought about these. I don't know about weekly though. That was
weekly was brutal. Weekly was brutal.
All right. Well, everybody, enjoy your the rest of your week, and it was definitely great chatting with you. And if you want to get in touch with Denisha,
Denisha Gray. I'm thinking about what I was giving you guys. Sorry. So my Instagram is at Gray, GRAY _financial. And my email address is dgray, that's Gray with an A, at gray-financial.net. And my website is www.gray-fin.com.
And then if you're looking to get in touch with me, you can go to my website, www.jpaye.com. And all of my contact information is available there. You can definitely email me at info@jpaye.com. And if you're watching on the gram, you can just send me a DM, or you can go in the link in my bio and schedule a free 15-minute legal chat to talk with me one-on-one, because I definitely love chatting. And I've actually chatted with a few of you guys from Instagram and YouTube in a free 15-minute legal chat. But we have got to get back to work. She has some accounting stuff to do. I have some contracts I need to get done for clients tonight. So definitely enjoy your evening, everybody. And
can I type the name? Okay.
And then we will let you know.
I'm gonna type it in. Can see me.
June 26th, right? Is the one
Yes.
we're doing in Atlanta. That's real estate focused.
Oh, can you give your YouTube again? That was one of the things on here. Jonetta's gonna type her YouTube.
I think it's JP Law is my YouTube channel.
Is it that? JP and Associates Attorneys?
Yeah. Well, I think the handle is JP Law.
Yeah. Anything about YouTube?
Yeah, I'm barely on YouTube too. Alrighty. And then we can hit end. Yeah.
Bye.
All right. Bye.